mixed. When it comes to South Africa's rand, it managed to hold pretty steady against the dollar on Friday, propped up by increasing supply from the mining sector, which got it to a session high of about that 907 level, but it did fall from those stronger levels after that improved US jobs data or report came through, which worked to strengthen the dollar. We've got the unit this afternoon at 916, so quite a bit of weakness coming through this afternoon. This week, of course, we've got the market watching for the release of January retail sales numbers and manufacturing and production data, as well as the current account and spending data for the fourth quarter of 2012, all in a context where concerns about South Africa's current account and budget deficits have acted as strong negatives and certainly seen the rand weakness that we have become accustomed to come through in a big way. So that's the broad markets picture that we're faced with this afternoon. Sasha, thanks so much for joining us at the desk as usual on a Monday. Sasha Naryshkine, director at Vestact, with us right now. As I say, optimism seeming to take hold of the markets for the most part. What are you making of the optimism that's filtered through? Of course, it's a stance that you've become well accustomed to.
I guess warranted. An improving jobs number, I think, underscores why I guess the Dow Jones Industrial is trading at all-time high, and why probably the S&P is creeping ever and ever closer to their all-time high, and our markets are trading at an all-time high. So I think it's more a lot of things aren't as bad as they were. So there's no kind of crisis taking place anywhere. I guess you could argue the outcome of the Italian elections is not exactly good news. But I guess, these are generally bureaucratic countries that could probably run without a, government for a while. And I want to put that against the backdrop of, I did some reading. So in the pre-Euro area, I think there was something like 61 governments in Italy post-World War II to the pre-Euro area. So, this is kind of more of the same, and maybe, Mediterranean flair.
A lot of the directive being provided by global markets, though. So let's take a look at our local market performance here. Certainly not 40,960 points on the JSE All Share Index. Is it warranted given our local fundamentals at play? As I highlighted a little earlier, we've got a slew of economic data that we've got our eyes on this week.
Yeah, I think one must separate maybe South African economy from South African market, because our market, essentially, if you look at the top 5 listed companies, they've all got primary listings somewhere else. So essentially, our top 10 are more than 50% of the overall market capitalization, and a lot of those are not really South African businesses. So we're being driven by people's appetite for industrial companies. So British American Tobacco, obviously touching all-time highs. I think they're ex-div today, so we'd probably be even higher. But companies that have had a fantastic run, and companies that people are willing to pay up for. We might find it mind-boggling that people want to pay 25 times plus earnings for SAB Miller, but SAB Miller is not what South African fund managers who've maybe been in this market for 30 years remember as SAB Miller was 15 years ago. It's a different beast, and it operates on the African continent without competition from any of their global counterparts. So I think a lot of people view Africa, our continent, as the next growth prospect, and particularly in kind of light luxuries such as beer. That is why people are willing to pay a little bit more for breweries than anything else.
To what extent does the same hold true for a company like Sasol? Because that company out with results this morning, headline earnings per share up 2%. And speaking to the traders at the desk this morning, they were very negative about Sasol and the kind of numbers it's come through with, drawing specific emphasis to the long capex cycle that we're looking forward to with Sasol.
Because in that sentence you used trader and long term. So you're an investor if you're looking at these longer term projects, because you say to yourself, well, at $21 billion relative to their market cap of 28, that's a massive number. And of course, it's going to take 6 odd years from now, but that's not too untoward. If memory serves me right, Qatar, that went from 2001, the announcement, to actual first production in 2007, and there were problems there. Now, if you have a look at the numbers this morning, what becomes immediately apparent is that the margins on their international Synfuels business is similar to the margins on their local Synfuels business, which means they could replicate it at scale in the US, and that would be a game changer for the investment. It would garner some sort of re-rating. People would say, at the moment, not willing to pay more, 8-9 times earnings. They'd be able to say, well, now I can pay 12-13, because suddenly it becomes a takeover target too, if they've got a proper presence inside of mainland North America.
What have you made of the company's strategy so far? Because, of course, the company suffered that 2 billion rand impairment from the Iranian operation as well.
Well, they're exiting. So they're saying to themselves, out with Iran, in with the US.
So
you can't be in the same place at the same time.
Exactly. So the fact that they are able to adapt like that and are flexible enough in order to survive and change the strategy, that
massive execution risk on this US project, because I think it will be essentially a game changer for the company. They'll get a re-rating because suddenly you're attracting a different set of investor who says, right, I can see, smell, breathe this investment, and it has a North American presence where I don't have to get a passport to go and see how this company operates. I think that's probably the most important thing, and I think Dave Constable recognizes that. So at that sort of scale, is the project doable, and do you think they can pull off with the associated risks? Do you think they can pull it off? I think the answer to that is a definitive yes. But are you going to have to be very patient in between now and then? Also yes.
And with their intellectual capacity or intellectual capital that they hold really standing out as well.
Yeah, often we view this as a technology company rather than one would say, for instance, an oil and gas company. In the same way you would view Visa as a technology company and not a financial services or financial institution. So I think, again, you're just going to have to be very, very patient. And I think the market is not willing to give it any sort of higher rating at this point. And you probably... The dividends, of course, are not going to be as forthcoming because it requires an enormous amount of capex. But the business is very cash, their cash flows are excellent. So they should be able to fund this. And there's demand, of course, for a dollar-denominated bond that they put forward. It was over 3 times subscribed. So the appetite is certainly there.
Well, from a negative performance at the start of trade, we've got that share price now sitting pretty flat. It's been pretty flat since about half an hour into the trading day in South Africa at 403. What are you making of the current valuation?
I think it's actually outperformed the market this year quite substantially. I think it's up like over 10%, whereas the whole market's up just over 4%. So I think people are perhaps warming to the ideas. I think the weakening rand obviously is key. In the short term for their Synfuels profitability here. And remember that Synfuels, both international and local, I think contribute 13.5 billion out of nearly 19 billions worth of profits. So it still is the core of their business, even though geographically they've got quite a nice spread and also through different industries. Synfuels is still this business.
When it comes to AVI, if people weren't warming to the idea of them venturing into the shoe space, today's results, many would say, would put some encouragement on the table, because dismal performance coming through from the fishing side of the business, and the business seeming to be supported by that shoe arm.
Yeah, and begs the question, are there that many fish in the sea? No, I think that aside, it's quite interesting, because I think the Green Cross business, if you strip it out, it's actually more profitable than the I&J business as a whole, even though it's smaller. I think their strategy when they bought the shoes business and apparel business, the Spitz, when they initially did that transaction, people went, I beg your pardon, and then they said, no, we're a brands business, and it's worked out superbly for them. Personally, I'm not going to buy a pair of shoes that cost that much money. I'm a bit stingy in that regard, but
prudent. Let's call it
prudent. But there are a lot of people who are willing to pay that much. And interestingly, it's a business that's and we all know the retail environment in South Africa has been very good over the last 7 to 8 years. So, you know, credit must be given.
Having said that, that you wouldn't pay that much for, you know,
would
for
I pay that much
shoes.
for the share?
For a pair, no, we'll get to that in just a bit. But, you know, don't you see that being one of their biggest challenges moving forward, that they are looking at a more constrained pricing environment moving forward, given the health of the South African consumer?
And, you know, I think we're probably in a wait-and-see mode. And you've seen that in some of the share prices. So they're well off their high highs, but not too far away. And personally, they don't look that stretched. So you've got the kind of old tea and biscuits part of their business that's been a performer for years and years. Who doesn't like a good Pro Vita and a good cup of tea with a biscuit? But essentially, so you've got these two separate businesses, the ones with you know, a lot higher margins. So who knows, maybe at the fringes you'll see a few more transactions where they'll bolt on brands businesses. So I guess the future is pretty bright for them, because they've got their solid kind of old conservative business and their business with higher margins, which they've been able to pull off 2 transactions so far. So I think the stock looks probably least stretched over maybe the last 18 months, and the run-up is probably
Enough
warranted.
incentive for you to be buying in?
No, well, we own mostly Tiger in that sort of space, probably because they've got a bigger footprint on the rest of our continent. I think with them, time will tell, but I think on a relative basis, we prefer to be buyers of Tiger.